All right. Hello, everyone. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined today by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. And before we get into any market-related discussions here today, here's a look at Derrick's positions as of our recording here today on October 20th, 2025. Again, he is the head trader at T3 Trading Group. So just quick disclosure purposes here for that. Derrick, happy Monday. How is the beginning of your week going so far?
Not too bad, not too bad. Market's up pretty big, working its way towards all-time highs. But even though I've got a lot of shorts on, I feel like I've been performing pretty decently last week, and I'm down a little bit today just with the amount that we're up because of my shorts. But I'm not mad about it. I'm not upset.
Hmm. All right. Last time you and I had talked, you were still, a week ago, pretty short this market. That had worked out really well for you the Friday before, of course, when we saw that down day. And then I wished you at the end some more volatility for the week. And I think you got a little more volatility for the week last week. Definitely one of the more volatile weeks that we've seen in this never-ending grind higher. Of course, like you mentioned, near all-time highs here today. So we're still in that never-ending grind higher. But in the interim, how did you navigate last week's action, and how did that work out for you in your portfolio?
Sure. So last week was a really interesting week, because you're right. We got a ton of movement day to day to day, but by the close every day, we didn't really end up going anywhere. Almost every day, Monday, Tuesday, Wednesday, Thursday, sorry, Tuesday through Friday, we ended up closing within Monday's range, right? So let's take a half step back. And I can throw up my charts real quick. Actually, if you want to see them, it might be a little bit helpful.
Yeah, definitely.
Cool. So let's take a step back to a week ago Friday, right? We had this huge move down with the S&P on a little bit of a shock event that stemmed from some commentary out of Trump on China tariffs. And the low on Friday is what I've been talking about every day last week. The low on Friday got us like right to the cusp of some major systematic sell points where if we could ever really get below Friday's low, I'm expecting that it would trigger a whole massive additional wave of selling. But we were never able to get there. So Monday comes around, and by Sunday night, Trump had already tacoed out of what he said on Friday and was backing off on the tariffs. And we had a percentage plus gap up. We were up really big, but it gave us an inside day. Technically speaking, I actually really like this inside day because it gives us some perspective after such a really big move on what kind of the important levels are. So inside days are important. It's a tightening pattern. And basically what I was saying all week is if we can really break and hold above the inside day high, it indicates that we're probably going to be moving higher, going after 670 and going after all-time highs. If we can break and hold below the low of the inside day from a week ago Monday, then we're probably going to work our way to test Friday's low. And if you test Friday's low, there's just a whole bunch of forced selling that I'm expecting to come in between Friday's low and SPX 6500. So Tuesday comes around, we had some headlines from China. We gapped down, but we couldn't hold below it. We closed right back within the range. Wednesday comes around, we gap above it. We trade a little bit higher in the beginning of the day, but then we come back down. We close pretty much once again right within Monday's range. Thursday comes around, we gap higher again. We sell down pretty big. We close near the low end of Monday's range, but with still within Monday's range. And then Friday was particularly spectacular in the pre-market. I started my trading day at like 4:10 a.m. Eastern time on Friday. The VIX gapped up to $28, $29. The market pre-market was well below Friday's low, but we started to grind higher pre-market. Trump tweeted some comments that further eased tensions related to China that the market liked. By the time the market actually opened, we had such a massive move on Friday pre-market. Let me pull it up on the small time frame chart. We moved more than we move in a typical day, all in the pre-market on Friday. And you can see it here. Friday, We put in this low of 651.50 or so, again, below the low from that week ago Friday, that really, really important area. I was excited when I first started trading at the zones. Like, oh my God, if we can open up down here, this could lead to some massive selling, and it's a risk off Friday. Let's see what happens. And then you can see the grind higher. You can see the rip higher at about 7 o'clock when the tweet happened. And after Trump's tweet, we were already back within Thursday's range. By the time we opened, we were basically back within that Monday range, and we closed at the high of that Monday range. We actually closed decently positive on Friday. It was just a massive, massive day. Now, the most notable thing about last week is actually what the VIX did compared to the S&P. So we had a massive move in the volatility space Thursday into Friday. Almost can't even see it on my charts here. But Thursday, so 20 has been important for the VIX, but the level that I have been discussing has been 25. The data I read that was above VIX 25, you could get like an actual VIX squeeze. Most likely, a VIX squeeze, this is what usually happens, would correspond with a pretty major market sell down. So Thursday, the VIX gets above 25 near the close, closes above 25. When I saw that, I was already expecting Friday for the market to gap down. So when I woke up at 4:10 a.m. on Friday and said the market was set to gap down huge and that the VIX had squeezed all the way to 28 plus dollars, I was like, this is exactly the expectation based on everything I'm looking at from a positioning perspective. But we started to grind down in the pre-market as the market was grinding higher. And by the time we opened, I think we opened near VIX 25, and we crunched that all the way down. Now, what makes this particularly interesting is the lack of a market sell-off, actually. The lack of a market sell-off within the confines of what the VIX actually did. The VIX moving up like that creates some degree of forced selling from any systematic funds or hedge funds who toggle their leverage exposure based on the market's volatility. And VIX squeezing higher, there was actually a tremendous amount of selling last week that came from funds that are toggling risk and leverage based on volatility. I think it was like $85 billion worth of selling overall over the course of the week came out from those vol funds. So what's so incredible is that $85 billion worth of selling that came from vol last week couldn't actually get the market to break below that key level I keep talking about, which is around SPY 653, to trigger the additional market selling. So we got the VIX kind of upside squeezy move that actually triggered, but incredibly, it never actually, the market never actually did. We had something that came in from the volatility universe, but we never actually triggered the bigger systematic points. Why? The next question is why? The answer to that is a couple of things. One is that a lot of people were hedged. So people were monetizing their hedges into Friday's move and pretty much throughout last week. And monetizing hedging is the equivalent of buying in the market. That's one. Two is it's the retail community. The retail community, the buying from retail has been nothing short of spectacular and incredible, and it is week after week after week. On the day of the actual sell-off, that October 10th, a week ago Friday, huge sell day that we had. I think it was like the biggest day of retail call buying option like in history. That week, that week of the sell-off was like one of the biggest weeks of retail buying in history. And last week, they continued to do it as well. The average market participant that's out there has just gotten so used to buying even the smallest dips while also selling VIX spikes. I think a lot of people, even though it was a little while ago now, it wasn't too long ago, a lot of people really look back on August 2024, which this, by the way, on Friday had the capacity to be very similar to August 2024 if we didn't get safe pre-market. look towards that and remember that the VIX spiked up until 65, and everyone's seen all the same statistics that when you get a VIX spike up to a price like that, it is like the ultimate buying opportunity. And people learn that lesson. And this was no spike to VIX 25, but it was enough for people to say, all right, I'm going to monetize my hedges. I'm going to short the VIX. I'm going to buy the dip in the market. And a massive amount of retail flow came in, combined with positive gamma, especially positive short-term gamma in the market that creates a cushioning hedge and a monetization of those hedges, and we were able to be saved. Now you fast forward to today, given how we closed on Friday and given where the VIX closed on Friday, the market continuing up today is exactly what makes sense. And honestly, there's a decent probability that we actually now are able to really continue higher. And I say this from a technical perspective. If we can start to get above the high of October 10th, you're at all-time highs again. The market looks fantastic. But basically, when the VIX comes back down like it now has, VIX is trading at 1880 as we're having this conversation. It was just at 28 plus. When the VIX comes down the way that it has, it actually forces the opposite. It forces a re-leveraging into the market. So you've just got a ton of forced buying that's coming in here today, that's squeezing us up, and it's just a question of whether or not we are actually able to just immediately get back to all-time highs. But a lot of like historical statistics on a VIX move combined with the market not going down like we just had typically indicate that we are going to go higher. I'm honestly still a little bit nervous in the long trade because I just don't think that we unwound enough long exposure last week. And then the final thing that I would point to is I am expecting that the retail bid is going to begin to drop off now. We've just had 7 weeks in a row of a massive retail bid. A statistic that I read that came from Morgan Stanley has told me that on average, you get like these waves of retail buying that last on average 6 weeks. Last week was week 7. So, how averages work obviously can continue. But what I'm really watching, and I'll turn it over to you in a second, Gordon. Just there's so much to unpack here. What I'm really watching right now in terms of a better understanding of the retail bid, and it's where my focus for the short side of the market switched to last week, is on the meme sector, if we want to just broadly call it that, which is comprised of quantum, it's comprised of rare earths, it's comprised of some degree uranium stocks, it's comprised of crypto mining companies and crypto treasury companies. So this is probably the reason why the market recovered as well as it did on Friday and closed nicely positive, and the market's nicely positive again today. And I'm doing really well given the market movement, is because I've switched my focus to shorting RGTI and shorting QBTS and shorting UUUU and UAMY was a great short of mine that I put on as a new trade just today. I'm short this OKLO now. So I really kind of switched my focus to, all right, I think that the parabolic move in these meme stocks and these quantum stocks and all that is actually at its end. Retail is throwing their money now into buying the market-wide dip. So they're buying a little bit less of the actual meme stocks, and we're in that week 7 or so, and these stocks are just at this point, if I'm going to really say it, this UUUU, which is a position that I'm sure, as an example, this thing made $78 million in revenue in 2024 and was trading at a $6 billion plus market cap last week. It's nonsensical, but a market can remain irrational for longer than I can remain solvent. So you have to turn to the technicals. It's been completely parabolic. And I think that these companies, a lot of them over time are going to work their way to zero. We seem like we're back in a, hard to say the exact timing, but late 2020, early 2021 period again with these stocks. They just got completely silly. I think that the retail bid is going to slow down and that these names are done. So turning to the short side on that has worked phenomenally well. And rant over, I'll turn it over to you, Greta. Thank you.
I was gonna say the action is very COVID pandemic-esque for sure when it comes to the retail traders and the buy the dip. I mean, every time there's even like a tiny bit of red anywhere, it's like buy the dip, buy the dip, buy the dip. You're seeing that again. So let's compare that to 2020, 2021. Retail traders obviously got very active in the market during the pandemic, and the buy the dip was happening, and we were seeing the short squeezes, the GameStops, the AMCs, the craze, the Dogecoin, all of that stuff happening in 2020, 2021. Then kind of like real world market came back in like 22, 23, 24, kind of things kind of, and then a lot of those people got burned and hurt when it came to real normal market action returning, and now we're kind of seeing that craze again happening, like you mentioned. Is the market dynamic going to change, for the long term, and more old school traders like yourself have to change? Or do you think these retail traders get burned again eventually when things kind of go back to the norm on Wall Street?
They get burned eventually. The timing of it is just what's so difficult, to be honest.
Hmm.
Because like I said, a market can remain irrational for longer than you can remain solvent. But
Right.
while in the short term, the market or any individual stock is a voting machine, in the long term, it's a weighing machine. And at a certain point, if you can't have your company justify its valuation, then it's not going to be able to stay at the price. Again, in the short run, it could stay at the price. It can go to higher prices. It can go to prices higher than those higher prices. That is how retail mania works. It's how stocks become parabolic. It's what actually creates, in my opinion, trading opportunity and what makes this business so great. But in the long run, that stuff is going to weigh itself out. Again, it's just the timing that's so difficult, and that's why we look at data. That's why we look at statistics. That's why we want to understand. Well, what happened last week? How was the VIX able to spike the way that it was, but the market actually didn't? And then you come to the conclusions of who was on the bid in the S&P that was able to hold the market up. And then you see the same things when you're looking at like call option going off in meme stocks compared to their peaks in late 2020, early 2021, and we got right back to those similar peaks. Doesn't mean that we can't this time have an even higher peak and have even longer squeezes. It's something that's very possible. I would argue in some ways we actually have. In some ways, these squeezes are even bigger than what we saw in late 2020, early 2021. There's not really a poster boy of it in the same way that there was for GameStop last time around, but it's so broad based in so many different names. And I would argue that that's actually what, at a certain point, makes it most unsustainable is when these retail people that are trying to like squeeze and buy every stock, and eventually they go, oh, I missed this one. So what's the next one? And then they all begin to look for the next one. It just becomes too spread out and it can't actually last. But I'm seeing some scary stuff on like coming out of like the Wall Street Bets community, and that's why I just think that hopefully some of them are listening today, and hopefully some of them are going to be able to get educated because I see comments ongoing right now in the last couple of weeks that people are making them in that Wall Street Bets community that are the exact same comments that I was seeing them make in the beginning of 2021, and it did not end well. Right? In 2021, you had that big spike. And I can't tell you by 2022 how many phone calls I had with people who started trading in 2020 during COVID and were telling me, I made like $1 million and I didn't even really understand what an options contract was. I just kept buying them. And by 2022, they were like, I lost the entire $1 million. And then I learned that I still owe the government taxes based on the money I made in 2021, even though I lost all of it in 2022. And now I'm in a really bad spot. Um, there's an idea here that I'm seeing people say that is basically just buy the stock, just buy the market. It doesn't matter if it goes down, just hold it. Stocks always eventually go up. They always eventually come back. And if you've got the money, don't just hold it, buy even more because you'll eventually make it all back. And you know what? There is a degree of truth to that when it comes to the S&P 500. There is a degree of truth to that. The S&P 500 is an index, and one of the things that is so great about the S&P that always makes it go up in the long run is that they actually rotate companies into and out of the S&P. If you are not a good company, if you're working your way towards bankruptcy, at a certain point, the S&P throws you out and they bring in a company that's doing better. So you're never going to see the S&P go to zero unless you see like the world end, in which case your money is useless anyway. So there is some degree of truth for that in the S&P that people forget, I think, because it hasn't happened in so long, what like a lost decade for the stock market looks like, which is something that happens not too unfrequently actually in the market. But the last time we had that was really like the early 2000 period between like 2000 when the tech bubble imploded through like 2010 2009 when the financial crisis finally ended. That's basically a lost decade where even the S&P is able to go sideways, and Japan I think had like a lost 30 or 40 years or something before that market was able to make a new high. So there is a degree of truth to it with the S&P, but there's not a degree of truth to that when it comes to stocks. When it comes to stocks, there are a lot of companies that get started that eventually they go public and they eventually go bankrupt. And that is particularly true when you're looking at the growth area of markets, of growth stocks. Sure, you get some growth stocks that grow into their multiples, become real companies, become the next Amazon and what have you. But there is a much larger percentage of those that fade to nothing and fade to zero over time. We just saw this happen in the beginning of 2021. Some of those stocks are gone. Some of those companies went bankrupt, and other of those haven't actually returned even in this recent bull run. It's just the next set of them that are kind of running. Some of them are the same names, but some of them are new names. They're the quantum names, or the rare earth names. They're Bitcoin mining and treasury companies. But at the end of the day, if you're a pure trader, the action's great. And I went long GTIS today is a name. I'm still long it. Hold on, did I say the symbol wrong? GSIT. I'm long GSIT today. This GSIT. It's up 180% on the day. I've been trading it back and forth for most of the day today. The stock is just completely nuts. I'm not saying that stocks can't go higher and that you can't. If you're trading, this is a great environment because you can actually trade both sides of it. But if you're going to have this mentality of I can take a company that doesn't even have revenue yet, but trades at a $20 billion market cap, and if it goes down, just hold it, it'll eventually come up. If it goes down, just buy more, it'll eventually come up. That's not necessarily true. And many of those companies will eventually go down and never come back up, and you will lose 100% of the principal that you invested in that if you don't know how to trade and stop yourself out of those positions.
Good stuff, Derek. Comment from YouTube. Angelo said, "Man, that happened to me this year. I made 80K crypto profit in late 2024, then lost most of it in early 2025. Had to pay taxes on the earnings regardless. It's a brutal reality." So I hope some of what Derek was just saying can resonate with you, and you can learn from that, and maybe get some help. All right, Derek, let's talk about this week. We do have some important earnings coming up this week. We're getting the trickle in of big tech earnings, real companies reporting some earnings this week. Netflix after the close tomorrow, Tesla after the close on Wednesday, IBM as well on Wednesday, then Intel on Thursday after the market closed. So the three big ones there, I'm going to say, Netflix, Tesla, Intel being much more important now than I think, Intel before Q3 of 25 was, of course, because of that NVIDIA investment and the government investment as well. So of those three reports, which are you the most focused on? In Netflix, Tesla, Intel? What do you care?
So, I mean, I have a position in Tesla right now that I'm probably going to reduce a little bit. So just by nature of being in Tesla, it'll probably be the biggest focus. But this is the real beginning of earnings season, so this is going to be an interesting week just to see how these perform, and then next week gets bigger. We got the banks already, and the banks earnings reports were good, but they're a little bit hard to read because I think that the charts are a little bit clouded by kind of some of the stuff that's going on with like regional and community banks and then potentially having to be saved, and that whole fiasco that we started to see a little bit of last week probably put a damper into the XLF and most definitely the KRE as a whole. Of those, I think like Wells Fargo actually probably looks best of the big banks. So overall, the banks are off to a good start, but they're not trading great. And again, it's a little bit muddied by the fact that we have this potential crisis ongoing at the same time that led to outflows. So it's hard to really even use that as a beginning gauge. But my general thought process for this earnings season, until the market proves to me otherwise, is actually the same general thought process I had on the last earnings season. I think that earnings expectations are too low. So you're going to see a lot of companies beat on their expectations. But beating on expectations and even beating on guidance doesn't matter. What matters is the reaction from the market. And the last earnings season, we saw a tremendous amount of beats across the board, tremendous amount of guides that were higher than expected, but also a lot of stocks that did not perform regardless of those results. And as a matter of fact, it became a running joke over the course of the last quarter that the only thing that can make a stock going up is reporting really good earnings. It's really kind of what it turned into when you look at a lot of the semiconductor names or Microsoft or Meta. It's like the only thing that stopped these things from continuing to go higher was the fact that they came to their earnings reported phenomenal earnings, and then the market was like, oh, they're phenomenal, but look how much the stock is up into the report. And a lot of that, as we are a hair away from all-time highs, is the exact same right now as it was. So that's what I'm expecting. We'll see what happens.
All right, and we are still in a government shutdown. The market still seems to be okay with it. The news this morning from the White House was economic advisor Kevin Hassett saying he expects an end this week. The Democrats will fold this week and vote on the stopgap. We'll see. But he said if they don't, the White House will be taking stronger measures to get them to do that. We don't know what those are. So we'll see. If we get the end of the shutdown before Friday, we will get a CPI on Friday. The Bureau of Labor Statistics keeps moving it because this CPI is really important. It is tied to the Social Security COLA, the cost of living adjustment. So they keep moving it, being like, okay, maybe by this Friday, the government will be reopened so we can do the CPI and the COLA. All of this data that we've missed so far, the jobs data, the CPI, the PPI, even housing market data, all important because next week we have a Fed meeting. Tuesday, Wednesday. Tuesday starts the Fed meeting. Wednesday is the decision on the rates. How do you think this lack of data may impact the Fed next week? And of course, what the Fed does impacts the market. So
I think that the Fed's going to cut a quarter basis point pretty much no matter what is my expectation. Okay. So I don't think that it's actually impacting anything at all, for better or for worse. It's been bullish to the stock market thus far. I can also throw that out there. We never went down on the government shutdown, but we will go up on the end of the shutdown. I think that's part of the reason why the VIX got crushed as much as it did and we're up as much as we did is because of those comments that you mentioned that came out this morning. And that's just how the market functions kind of in this day and age where it just circles back to everything that we have been discussing this entire time. The market couldn't go down enough to really trigger any actual forced selling, but the VIX went up a ton. So as you lose fear in the market because the government shutdown, let's say, ends, then the VIX crunches lower, and that forces the market to move higher, even though the market never went down on the shutdown to begin with. We should be around the point now, though, where the shutdown is beginning to actually impact the real economy, somewhere between 2 weeks and a month into a shutdown, based on the research that I've read, is where it truly begins to actually negatively impact the economy and potentially the market. We're in that 2 week to 1 month period right now, but obviously there's been no negative impact. So yeah, I mean we'll see what happens. Most likely, if we do get this CPI number, it's going to show a moderate increase in inflation again. And another interesting thing is that per a Goldman Sachs note that I was reading this morning, what's slowing down inflation right now is that the economy is continuing to deteriorate. That's the biggest thing that's offsetting further acceleration in inflation. Yet you wouldn't know it if you looked at the stock market because the stock market isn't the economy. The stock market's stock market, and the stock market is 85 or 90% of its gains are coming entirely from AI.
Yeah. All right. In this market that just doesn't seem to stop going up. Anything you like, any setups that you are looking at as a trader? I know you start index level and narrow from there, so
Well, so the market looks great. The market looks great. There's a good chance that we start to get some further rotation back into Mag 7, I think,
mhm.
especially especially if you see the meme names continue to kind of bleed out, which is kind of my expectation. I actually
And
think that
earnings
if the
next week with the
right,
Mag 7, yeah.
I think that if the market continues higher here, it's being back to being led by Mag 7, and that's after Mag 7 has really underperformed the last 2 months. So any of those charts that look decent, I think that you can potentially buy. Apple looks phenomenal, but it had such a big move today that I think it's become a little bit too extended. So you got to be careful chasing things. Tesla, we'll see what happens with earnings, but Tesla looks great if it continues to hold above 440. Micron, is continuing to move higher and look great overall, but this also I think got slightly ahead of itself. There's just a lot of names out there with some really good looking charts that you can look for continuation from.
Derek, I'm gonna have to, clip this. Tesla looks great, and just, like, blast it all over the internet. Derrick Oldensmith said, "Tesla looks great." Wow, what a
I
day.
keep it. I keep it real. I think the company is overvalued. I think that there's a lot of. It's crazy, but the technicals are what tell the tale, and the technicals look great if the stock's able to continue to hold above 440. But it didn't stop the head of their robot division from quitting to go to Meta for a peak cut. I wonder what could have driven him out, but doesn't matter. So
But
the
the
stock goes
chart
up.
looks good, and that's what matters, right? When you're trading, doesn't matter what your personal thoughts are. Just trade the technicals. All right. David is
Exactly.
a, Derek is a real trader, so I'm going to let him get back to doing that. Again, he is the head trader at T3 Trading Group. If you would like Derek's free ebook, you can go to t3live.com/DO live. It's a ebook about prop trading, the benefits of prop trading, how you can become a prop trader with Derek and his team, and work with them. So again, that's t3live.com/DO live. Derek, have a good week. There should be some catalysts this week because we've got some big earnings coming, so that can create some excitement there, at least in those particular names. Tesla being the focus for you. Have a good week, and we'll talk next week. Next week we'll talk about the Fed and Mag 7. So lots to talk about on Monday next week. Have a good one.
Thanks, Greta. Talk to you soon.